Sign up today.
The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. The Trader's Edge. Now, Steve Rhodes.
Good afternoon, folks. Welcome to the May 7th, the Thirsty Thursday edition of today's Trader's Edge show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Hey, let's make sure we have an extraordinary one. And the easiest way to do that is to always remember that life is happening for us, not to us. That's right. We do not make that one little 2x4 shift. It means we can find the gift in every set of circumstance that life is going to toss at us. Now, today, you and I, we're going to go check on the circumstance of these markets. We're going to go figure out what those bulls and bears, what those buyers and sellers are communicating to you and I just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here, but much more important than that, during this next 60 minutes, I'm here to serve you. So feel free to pick up that phone. You can dial on in 877-927-6648. If you can't dial in, we've got you covered there too. You can always send me an email, steve@tfnn.com. Inside that subject heading, please put radio show question, of course, in our Tiger's Den. Well, any ping will do. So let's go ahead and get this show started on terrific Thursday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to Lush Show. Right now, we got all the indices in the green. The Dow's up 363 points, 1.5% to the upside. S&P about 1.75%. That would be about 49 points. Nasdaq about 1.6%. Russell up nearly 2%, 24 points. She's trading on to 1287. The big winner today, winner chicken dinner, goes to the Dow Transports, up 177 points. She's trading out at 8110. You've got gold up 36 buckaroonies out there. Silver's up 57 cents, nearly a 4% move there. Light sweet crude up 91 cents, trading out at 24.89. Natural gas back 3 pennies. The 30-year Treasury up over 2 full points, trading out at 180. Almost going to be trading out at 180 and 30 seconds out there. So let's begin by getting an overview of the markets out here. So there's a couple questions. Peter wants to take a look at the ES Mini. Ruby's asking, Steve, is it time to get out of the NQ long or more room to the upside? So let's try to encompass all of that. So first, let's stop and take a peek at our TAS market profiles. And so here, Peter, with regard to the ES Mini, he is sitting right at where these sellers are at right now. That price point is $28.90 and a bit of change. We're trading at $28.90 and a bit of change out here. Now, that is the top of the profile. At the top of the profile, that is where sellers are, the snipers, resistance. We can go to a 30-minute time frame. Let's take a look at this version of the 30-minute time frame. Yes, Stevie's got multiple versions of his 30-minute time frame out there. They all provide different pieces of information. So let's go through what those pieces of information are. Here, as we take a look at the 30-minute time frame, we're looking for some type of topping pattern, Peter. Now, what we can see here, and really this might help you as well, Ruby. I did get to wave number 7. That was this morning at 10 o'clock. Wave number 7, that's letter G on my screen, can be where we see a change in trend. Price was also at that stage taken on its resistance level of 28.8175. That's different than the resistance we looked at on the daily time frame. Right now, we're focused on a 30-minute time frame. 28.8175 is where price had broken out previously, broken down, I should say, not broken out, broken down. And when you close above that, which is where the ES Mini is trading now, what this would say is this has more upside potential. But what you and I know is that that potential is in that daily time frame. So you've got to know where the sellers reside on the daily time frame. And we know that price is sitting right there. So there is the tug of war. 30-minute time frame chart, no bearish reversal signals whatsoever. And so it's just a battle that is going on using that 30-minute time frame. What else can Stevie tell you about the 30-minute time frame for the ES Mini? Let's go take a look at its opening ranges out here. Opening ranges, here you're going to see the opening range for the ES Mini. You're going to see 3 different opening ranges. The black horizontal lines. And at this stage here, this is the ES Mini. Just pay attention to the right-hand portion of our screen, our daily activity. So what I'm showing you here, the black lines are the opening range. Now, the opening range is the first 30 minutes. Now, you can use whatever time frame you would like to use. Stevie uses a 30-minute time frame out here. And what it does is establishes, quite frankly, a support and resistance level. If you are a equity futures trader and you're not using the opening range bars of what's going on in the U.S., that's going to be your first opening range because that opens at 6 o'clock Eastern time. The next opening range is going to be the Asian opening range. And so I've used red for Asia out there. And then for Europe, the opening range is going to be those blue bars out there, and they really help us understand what the market is doing. Is it breaking out as we have new markets, new major markets that are opening out here when price is just trading with inside the range? So take a look at last night as an example, to the extent that you had really a couple of different options. The opening range bar forms right here at between 6 and 6:30. On your next half-hour bar, you see price intra-session tried to get below it, but remember, it's always about the end of the candle for the time frame you're trading, and really it's more so about the body of the candle than it is about the wicks. The wicks are nothing more than the extreme emotions, I don't know, they're just the extreme emotions of that candle session. Then you can see even at 7:30 out here, you had a nice little doji candle, but again, it was a test and rejection of a key level of support. That was 28.26. Now, you really had a couple of different options there. You could have taken the long trade and had your stop below the low of that session. That was at 7 o'clock, that low out there on the ES Mini, 28.23. And then you would be looking at taking your profits potentially as price got up to the top of that range. That was 28.38. The top of the opening range for the 30-minute time frame in the U.S. and the bottom of the opening range for China were both at the exact same level. What's that tell you? Well, that tells you had once price got above it in the ES Mini, that ended up becoming strong support. Old resistance becoming new support. That was support for the Asian opening. And then we can see here at 23.30 out here, price moves above that opening range, telling you that it wants to move to higher highs. Now, the opening range bar here for Europe out here at 3:30 this morning, quite a range inside the ES Mini, from a low of 28.54 to a high of 28.75. Maybe not such a large range these days. In the old days, you would be glad to get that as your range for the day. Now we can see here as prices cleared the 28.75 level. We know on the ES Mini where that resistance zone is on the daily time frame, but on the short-term time frame, this is saying that it wants to run. Now, Stevie has one other 30-minute time frame chart. It is my EKG chart out here. It's really telling you about the strength or weakness inside a market for its specific time frame. So we're going to stick here with the 30-minute time frame. And what I want you to pay attention to, you're going to see some red and green boxes. This is kind of, you figure the EKG is kind of like a sine wave. If I were to draw two horizontal lines, when the normal heartbeat would go to the up, to the down, to the up, to the down, to the up, to the down. In this case here, this tells us that the ES Mini, since earlier this morning, or late last night, has all these red boxes out here. This is telling you about the ES Mini, Peter. This is telling you about the ES Mini, Ruby, that this is still running a strong race out there. No green boxes. We'll come back. I'll touch a little bit more on this when we get back. But right now, very strong marketplace from a momentum standpoint.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today. TFNN is launching an open house for our Tigers Den. For a limited time, you can get a 30-day free trial to the Tigers Den. Just enter promo code OPEN at checkout and pay nothing for 30 days while you try out your Tigers Den membership as part of our open house. With market volatility at an all-time high and people all over the world working from home if possible, TFNN is hosting an open house in our Tigers Den. The Tigers Den is an interactive chat room that runs all day where other Tigers and Tigresses discuss trading ideas with the hosts and members, along with charts and current market news, as well as live access to the charts the hosts use during their programs. Join us for the Tigers Den Open House. Begin your Den membership today by just entering OPEN at checkout and pay nothing while you try things out for 30 days. For all the details and to start your Den membership today, visit the front page of TFNN.com. Don't miss out on the TFNN Tigers Den Open House taking place now. Sign up today.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. So we were taking a look at Stevie's EKG tool, really momentum tool out here. And the NQ, Ruby, is slightly different than what we're looking at inside the ES Mini. See, we had a little bit of a resting period here. This would be normal. The green boxes, you typically would go from green to red, green to red, green to red, green to red, and so forth. That would kind of be like walking, so to speak. And then you're watching to see if that's creating an uptrend or a downtrend out here. But at about 11 o'clock this morning, the NQ took a little bit, was as opposed to the 100-yard dash or what have you. You know, it took a little bit of a breather, created that little green box out there, for uptrend. And as soon as price closed above the high of that session, told you again, that was 90.77, and it was game on again back to the upside. So that's what's going on the short-term time frames. And let's take a look at the 30-minute chart here. Now, to answer Ruby's question here, what specifically is and what she should be looking for, I believe, on a short-term time frame, depending on where you're in from the long side out here, because price is above. So in the case of the NQ, if you take a look at it, still hasn't taken out the high from the trading session of April 30th. So it says caution out there, trading up into it. And what you want to be watching for is some kind of pattern out here. Well, in the NQ on a 30-minute time frame, we can see that we have Rhodes momentum indicator signals that have been triggered, have been confirmed. Those are the black diagonal lines that are going across my screen. They tell us about the NQ on a 30-minute basis that is actually tired out here. Now, what you're watching for is some type of bearish reversal candle, Ruby. If you get that, then you have to make the decisions, okay, where is support to the downside? The first level is going to be Stevie's green line. That's about 91.05 right now. But really the top of the 30-minute profile, old resistance could become support. So you'd have 9100. 9100.50. Below that is the center, 9078. And then below that, 9055 is the bottom. And then finally, the ultimate level of support is going to be 901275. That is its most recent breakout area. Now, there could be a new breakout level that forms, but right now it's 901275. Without any kind of bearish reversal signal on a 30-minute time frame, I don't have a reason to suggest that you would jettison that position. So I'd be watching the fight in the ES Mini. The ES Mini does not have that same pattern out here. So price, in its case, is actually moving higher with strength versus without strength, or it hasn't met all of my criteria for the Rhodes Momentum Indicator signal. So that's not present at the moment. And so the two are slightly different with regard to the patterns that are out there. So I hope that helps you out, both Peter and Ruby. If we continue looking at the just the overall equity markets out here before we go to a couple of questions, we can take a look at the advanced decline oscillator reading for the NYSE. That is in panel number 2 above. Its reading right now is 77 and change. It is above zero. Yesterday was a slight close below zero, and if today the close is above zero, the 121 reading doesn't matter, but it is above zero at 121, tells you that buyers were always in control. So Ruby, maybe that helps you out as well, just simply by understanding what the advanced decline oscillator, the market breadth oscillator for the New York Stock Exchange is communicating to you and I at this moment. If we also take a look at that spot volatility index, see if there's anything unusual here. There's not. It's moving lower. That is bullish to neutral for the S&P 500. So really, this is all going to boil down to 2890. Probably 2890.75 to be exact, as the battleground for the ES Mini. And we just have to wait to let the market communicate to us. If you had a hankering for going short the market and the ES Mini, then now is the time, even though we don't have any kind of a signal on a short-term time frame, because you clearly know this is where the snipers are at with inside that profile. So hope that helps everybody out. Again, take a look at these profiles out here. You've got the Russell above the top of its box, the NQ above the top of its box, and the ES taking on the top where the snipers are at. And the Dow is the weaker of the four. It has not been able to get up to where its sellers are at, and that's at the price point of 24,198. Let's go to our first question here. This coming in from Ian B. Ian is interested in taking a short in light sweet crude. Not in it yet, looking for maybe some daily, weekly support levels. So he wants to go short. What's light sweet crude? What levels does light sweet crude need to break from a support standpoint in order to confirm a breakdown? So if we take a look at light sweet crude, let me get over to the question is going to be, how are you trading light sweet crude? So I'm hoping that what you were telling me, Ian, is that what you're doing is you're going to trade the actual futures contract, and you're not looking at UCO, USO, SCO, I guess it would be SCO, right? Any of those vehicles. If it is, you're going to really have to see which contracts are inside that. I don't know off the top of my head. But since you just asked about light sweet crude, let's just look at the light sweet crude contract. Now, if you're listening to yesterday's show, I thought probably the best piece of advice offered during yesterday's show came from one of our experienced viewers, listeners, and that was John in Philadelphia. And what he was saying and what he was suggesting, and I would really take heed to this, look, the active contract, the front month contract right now is June. And he was purposely trading, I believe, September and December, or August and December out there. And what he was purposely trying to do is stay out of the May debacle that we saw inside of the futures contracts. And you may remember this chart here when we had May up there and it was minus $36, and we could see what all the forward futures contracts were trading at. We weren't seeing those strange gyrations out there. If it is June, then June is going to try to make it up to the top of its profile, and that would be 2760. Since John had asked about keeping track of December yesterday, let's go ahead and put the December. This is going to be up in the right-hand panel out here. And with regard to it, it's struggling. So light sweet crude for December, for that delivery on that contract, is struggling to get above the bottom of its profile. So that's 3216. And that's the area where you would be considering shorting. Now, you have to recognize that what light sweet crude also did, excuse me, let me just expand this out. You can see a couple of different trend lines that I have out here, Ian. And so this one that starts from the high out here on the trading session of February 20th, we can't see that price has broken through that area. So what it's communicating to us is that here's your range, 32.16, clear resistance out here, and support today is probably about 29.67, give or take, just simply based upon that trend line out there. Now, if we go to, let me switch over to another set of charts and tools. Oops, come on, work with me here, Let's pull over. Let's see what, I've got the December contract out here. So let's pull this over. Now, on the December contract here, we've got the daily time frame, the level of support. So on a move to the downside out here, it's really going to be Stevie's red line. So you're asking where is support? 28.03 as we speak right now. Do you want to take a short if price in December goes below 28.03? I'd say the answer is no. Now, the profiles on this are showing up different than what we looked at on my other screen. I want to use the other screen's profiles versus this Ninja Trader 8 set of profiles out there. Let me look at a 30-minute time frame. Resistance, by the way, is 36.73. The reality is if you were going to short light sweet crude, you'd prefer to do it from that breakdown resistance level at 36.73 out here. This is Steve Rhodes with TFNN. We come back, we'll look at the short-term time frame charts for Ian B. I'd love to hear from you, too. See you in a few. I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
If you're a trader in the market looking to find the path that leads to maximizing profits while decreasing risk, then now is a great time to try out Dave White's daily trading service, The Path of Least Resistance. Through the use of options and equity trades, Dave advises his subscribers on a daily basis of the current market conditions and what possible trade setups are on the horizon. The Path of Least Resistance is published every trading morning, often with updates intraday when initiating trades or closing out positions. Dave White has advised his clients of some outstanding winning options and equity trades in recent months, and now is a great time to try it out for yourself. New subscribers to the Path of Least Resistance receive a 30-day money-back guarantee. See for yourself the types of options and equity trades that are available by signing up for the Path of Least Resistance today by visiting the front page of TFNN.com and selecting the newsletter tab. Sign up today. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. So we're taking a look at light sweet crude. Right now we've got the December contract. We've got the 30-minute time frame. We're doing this for Ian Miller. Of course, that comes from my big fat Greek wedding out here. Now, Ian, on the 30-minute time frame, price is testing its breakout level, 30.19 out here. Now, we don't like that wide-ranging bar, so it's pulled back to support on a 30-minute time frame. I'm going to suggest that you would be making your trade decisions in light sweet crude more on the shorter-term time frames and take a look at the daily and weekly. So on the December contract, price is pulled right back to support 30.19. Now, I know that, John, I saw a little post in the den. I believe it is the August contract that you are trading right now. So let's go take a look at it and its 30-minute time frame, because it's going to look different. There are different contracts out here. So we take a look at the August contract. Other than pulling back to support, there was no other bottoming signal on the December contract. However, on the August contract, totally different situation here. You can see that as we came into 130, we made bar number 9 of a TD setup 9 count. We can also see that the breakout area is at 26.59. In fact, we've got a breakout area at 26.59 and 26.31 out here. Now, ideally, then we've got made a slightly lower low on the bar following bar 9 on the 30-minute time frame. The TD 9 count pattern is going to identify the next bottom out here. Those lows can take place on bars 8, 9, or the bar following 9. Now, ideally, you'll see this bar, the 10th bar, so to speak. You'll see it confirm. You will not see it actually get down and test 26.59. It's just a stronger move. Not that it can't get down there and test it and reject it. It's just typically a stronger move when it doesn't make it all the way back to where it had broken out or where it had broken down if you're going from the short side. Now, in this case here, the trade is between 26.59 and 28.94. That would be the resistance level out there. So on a short-term basis, on a 30-minute time frame, looks like light sweet crude is getting ready to create a short-term bottom using those tools. So, Ian, I hope that helps you out with regard to light sweet crude, and thanks so much for writing in. The next question coming in from Scott in Colorado Springs. I'll read your question there, Scott, in a moment, but I had anticipated that you would at least be listening today. Of course, I think you listen most days out there, and the reason is because you and I have talked about this trade that you were in. I don't know if you were in it, but it is and because you asked about the Euro U.S. dollar, I'm going to think that maybe you're not in the Euro U.S. dollar Japanese yen trade. But Scott was in this trade out here, and my suggestion was, hey, the TD9s have been working. The last highs and lows out here, if we take a look at them, when the pattern has formed, if you take a look at the high out here back on January 17th, that was a TD9 count pattern. If you take a look at the low that took place out here on February 3rd, that was on bar number 10. That was, again, below above the breakout level of 107.65. So you kind of put that together with what we just looked at on the 30-minute time frame. These patterns and what you and I are looking at, they work the same for every single time frame. That's the beauty of it. You just have to learn the pattern, and then you stick with the time frame that best suits your trading style out here. If you take a look at the bottom that formed back in March, that was on bar number 10 of a TD9 count. If you take a look at the high that formed out here on March 24th, that was bar 8 of the TD9 count. And voila, where are we at today? Well, the low of yesterday, the low of today is exactly the same. You've got a TD9 count. Now, the confirmation out here, this trade here, doesn't necessarily have the reward risk in it, even if we do see a bottoming signal. First, you wouldn't want to take that trade until price closed above Stevie's red line out here, since that has been tested and rejected today, and that is the 106.63-ish area. But the reason why I say the reward risk isn't as great is because you've got resistance smack dab at 107.76. So even though that's not what you called about, I did want to bring out the fact I noticed that the U.S. dollar Japanese yen, that this was the time to have taken those profits out there. Now, you were asking me specifically about the Euro U.S. dollar. So let's go ahead and pull up the same chart, same tools, same patterns out here. And you can see this had bottomed out here with a TD9 count, and this was back on April 24th. And what did price do? It ran right up into resistance, 1.0990. You see, this is what I have done here by utilizing this tool. I didn't develop this tool. This tool was developed by Tom DeMark. That's why I refer to it as the TD tool out here. But what I have done with this tool is put it to use and have tested it thoroughly. And what's really cool about this is this takes out all the subjectivity of trying to figure out where whatever it is you're trading for whatever time frame, where its breakout and breakdown levels are. That's a beautiful thing. Because if I was trying to teach you where something broke out, where something broke down, quite frankly, it would be a set of rules, but there would be subjectivity to it. And now what we've done is we've eliminated it. So all you have to do is trade by the numbers. For those that would have gotten into a long position because of the TD9 count pattern out here, whether it was April 24th or April 25th or April 26th or 28th or 29th out there, you would have known when you got into that trade that you would have to look at jettisoning that position, certainly tightening up that stop as price attained 1.0990. We're not trying to get the exact tick on the way up and on the way down out here, but you've got to know where the battle is. It makes it a whole lot easier. Remember, the first thing they teach you in the military is to first try to avoid the fight. Well, here we know where the fight is. It's at 109.90. If not avoid the fight, evade the fight. And if you can't and you've got to fight, well, then you just go ahead and, I'll let you finish the sentence. But if I were going to finish it, it would be kill the blank, blank, blank. Okay, there we go. Now, let me finish reading the question. So, hope all is well. What's your analysis say about the Euro-US dollar? Would you consider it support at the TD1? No. Support is going to be support out here. And even though it's broken, it now back above it. I'm seeing the 30-minute. Oh, so you're looking at this from a 30-minute standpoint. So the oscillator change line is going to be different out here. So let me get the 30-minute time frame out here. So let's get that going for you. So give me a second. Well, no, I don't see what you're looking at here on the 30-minute time frame. So I must have something. But here, let's do this at least. If you're looking to go along at least for a while. So here's the deal. Let me just pull the 30-minute time frame over here. And what you're going to see is really a lot of resistance, these green horizontal lines out here. And so right now it looks like the euro is making a run for that first level of resistance, 1.0839. Scott, what I would do when you're looking at this is trying to take a longer-term position, I'd really see how the battle unfolds at 1.8039, at least on a 30-minute time frame. If there's going to be a change in trend, you're going to see these levels broken. Just like up at the top out here, if you're going to see a change in trend, you're going to see support levels broken. It's folks, I'm not trying to simplify things, but I'm trying to simplify things and just trade by the numbers. And if you do that, it's going to be just so much easier. Let's try to not complicate things, even though many of these patterns, maybe they look complicated. I really do try to help you focus on just what you need to know. If you'd like to learn this pattern, other patterns, just sign up for Mastering Probability. You've got access to the archive workshops on your members pages out there. And I promise you that it'll be a worthwhile investment, and there's no risk to you for the next 30 days. Steve Rhodes with TFNN will be back, and we're going out to Denver, I think, to take a look at Beyond Meat, which is Beyond Me. We'll be right back.
If you're in the CD market and looking for a secure investment, the Tiger First Mortgage Program may work for you. The security for these first mortgages are building lots in the tax opportunity zone in St. Petersburg, Florida. The Tax Act of 2018 set up tax-free zones across the country where you can build and hold for 10 years and pay no tax on the profits, which makes these lots valuable. The investment is anywhere from $30,000 to $75,000. The interest paid is 7% yearly, paid on a monthly basis. According to Bankrate.com, the best rate for a 4-year CD in the country as of February 20th is 3.1%. A $50,000 investment at a normal 4-year CD rate of 3.1% would give you income of $1,550 per year or $6,200 over the 4-year period. That same $50,000 investment in the Tiger First Mortgage Program would give you $3,500 per year or $14,000 over the 4 years. Which would you prefer, $6,200 or $14,000 of interest on your investment? If you would like more information about the Tiger First Mortgage Program, you can call me at 877-518-9190. That's 877-518-9190.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD, Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. Dow's up 350, S&P 45. Let's go out to Denver, Colorado, and speak with Ron. Ron, thanks for calling. Thanks for holding. How are you doing today?
Great, Steve. Thank you for taking my call.
My pleasure.
I was looking at, Wendy's is not serving beef because they're out of beef and beef prices are high. I just wondered, on Beyond Meat, people might start to look at it and start to try it. And I think the people that try it like it. And I just wondered, it was weak earlier, now it's coming back strong. How does it look?
So you're considering taking a long position?
Yeah, I bought some calls here about 2 hours ago on it. When it was down about 7, it was down 5. I bought calls. I went out about a month.
Yeah, so certainly there is some. If you take a look at yesterday, there was a sign of strength. Now, the sign of strength, there was a wide-ranging bar, so there was a gap to the upside. You fill in that gap. It was a wide-ranging bar with accelerating volume. That was 18 million. I'm sorry. Hold on. I was looking at today. That was 38 million shares. Today, you're already at 18 million. So 38 million shares. Now, that was pushing into really 2 swing points out here. The first one it was pushing into takes us back to February 19th. It only had 8.7 million shares. That's telling us that price wants to at least tag the top of that. That's 129. The next swing point that it's pushing into was on January 14th, and it was 51 million shares. And that top is 135.23. Ron, that's really where you're going to get a sense for if this is ready to break out and continue moving back to those highs out here. 50 million shares on January 14th. The last time that price was trying to push up there, it did it on January 22nd with half the volume. And that ended up being really the top, and price ended up moving down into the lows out here in March. So you're moving into an area. Now, look, if it can close above 135.23, you're in good shape. But this is the area here, the prior highs, and it's pushing into it with lighter volume where you've got to be cautious.
Okay.
You just have to be.
Thank you. Thank you very,
cautious.
very much. I appreciate that.
Yeah. Now, if I look at the weekly time frame out here, the weekly time frame is saying really the same message. Now, when I say the same message, the snipers on a weekly time frame are hanging out at 129 even Steven. That is the top of its profile out there. So the better time to have taken the position in Beyond Meat would have been a few weeks ago, because this was a bullish structured weekly profile. The bottom of that box was is 80.51. The center is 88.59 out there. And once price started closing above 88.59, it was suggesting that buyers should have the strength to push price all the way up, because it's a bullish structured profile, to resistance. So you've bought those calls coming into a real resistance zone out there. And what I don't know is how the battle will unfold. I don't know whether buyers will be able to push through it. It was nice yesterday that it had a good start with good volume pushing in. But today's volume, right now, you're at 18 million shares. Even if you multiply it times 2, you get back towards yesterday's volume, but it's probably not realistic to multiply it. So volume's starting to light up as it comes into that resistance area out there. And what's happening is those folks that were, thought that, hey, Beyond Meat was breaking out because of the activity January 7th, quite frankly, through January 14th out there, those folks that got into it were probably saying to themselves, because they were in the 130, 85, 90 area, and when price was at $40, what do you think they were saying? What kind of prayers do you think they were saying?
Yeah, if I can get even, I want out.
Okay, so now you're against the if I could get even, I want out group out there. Doesn't mean it can't bust through it out there, but you're just up. You now know the battle that you're clearly up against.
Okay, thank you very much. Thank you very much.
Yeah, you bet. You bet. Always good to talk to you.
You got time for one COVID quick joke?
I'm sure, as long as it's clean, yeah, it doesn't get me kicked off the air.
It's clean.
Okay.
I told my ex-wife with the flu and the COVID, if I die, I want to be cremated. She called me back the next day and said, I got an appointment for you next Tuesday.
Okay, all right, good deal. I tell you what, before you do that, come on, hang out with me down in Delray Beach. Ron, thanks for the joke. Thanks for the call as well, and best of luck to you in your trade.
Thank you. Appreciate your time. Thank you.
You bet. So let's go. No other. I did have a request. This one coming from Hectorino, Hector and the Fuel Injectors, and he wanted to understand where are the snipers inside of Square. SQ is the ticker symbol. So where are the snipers here? We're looking right now for the TAS market profiles, and there's really going to be two sets of snipers out here. The resistance level is on the weekly level out here, Hector's 87.25, and on the monthly, it's 95.41. Now, what I want you to pay attention to, if this is only a counter trend rally inside of Square, and we were using the weekly time frame, because it's a bullish structured box, we would have said it was the center profile level where that counter trend rally. It would either be the bottom or the center. The center I see more often than not, and that's 76.27 out there. So this is trading up against a resistance area. Now, we have to look at the daily time frame to see if there's any pattern out here that you have to be concerned with. So this was beyond, but let me get this to Square. And that way we can really see what kind of patterns there might be out here. So this is going to take a moment to populate. There we go. So now as we take a look at Square, we're just looking for any kind of potential topping signal, and 79.49 is going to be your next sniper area on the daily time frame. That is where Square broke down. You can now my green line doesn't extend all the way across out there, but it all I have to do is add some bars to it, and it will. But that is where price broke down, 79.49 out here. That was on the trading day of March the 4th. So now I don't see any reason why price won't make its way up to that level. And if you can get a close above that level, then that says that it wants to continue to move higher, more towards those levels that we looked at on the weekly and or the monthly time frame out there. But right now, everything looks really good with Square. What you really like about this was, quite frankly, the trading day of September 4th, because a few days before that, Stevie's red line turned green. We know that when that happens, the phenomena is that we typically see that line and price test each other. It is that test that then tells us what the market wants to do, or this instrument wants to do. That was a test and rejection. That was a bullish test and rejection out there, and said that price wanted to move higher. You want to see, folks, this works the same way, different instruments. It's why you also learn about the oscillator unchanged line out here. If you take a look at, let's take a look at the Dow. Let's take a look at the Dow. Because we've looked at the ES and the NQ. Take a look at the last couple of days. Take a look at this morning. Overnight trading. What did the Dow do? It pushed down to test Stevie's red line on its daily time frame and bounced off of it. Again, a really key, important level of support or resistance, and whether it's red or green, it tells us a lot. Now, in the case of the Dow, you can still see the Gartley sell pattern. So really, the pattern here is neutral. Close below 23,486, Stevie's red line, would be the signal that it's ready to head back to its March lows out there. The NQ, let's just pull that back over here again. We'll see a couple of days ago that what the NQ did was it tested and rejected Stevie's green line. So it's bullish. It was giving us the bullish message out here. The question is, can this edge just a little bit higher and get to wave number 7 out there? Because wave number 7 can also be a top. But there's an A to B equals CD to the upside. We're really looking for a bearish reversal candle in the NQ. That may be the straw that breaks the NQ's back. I know, you thought I was going to say camel. Fooled you. Steve Rhodes with TFNN. We'll be right back.
Markets trading with extreme volatility and peaks and troughs everywhere, regardless of what you're looking at in the markets. This is a great time to see the type of analysis Basil Chapman delivers for his subscribers every market day with the Opening Call newsletter. Basil has been analyzing markets, providing his take for subscribers to his trading services since 1984. Every morning, Basil publishes an update for his subscribers, along with weekend and evening updates when warranted. The Opening Call provides traders a daily market overview with regard to the direction of the key indices, selective stocks, and commodities, along with specific recommendations, including stops and targets. You also gain instant access to Basil's subscriber webinar archive from earlier this year, a dark cloud cover, and essential market analysis. Ride the Chapman wave today by signing up for the Opening Call newsletter on the front page of TFNN.com under the newsletter tab. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Sign up today.
The gold market has taken off topside in a large way in 2020. If you want to take advantage of this sector, now is the time to subscribe to my gold report. The gold report took profits in 4 of its equities in the gold portfolio in the first week of January for a combined profit of 99.2%, with 2 positions left in the portfolio that have a profit of 67.5% as of January 7th. The gold report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the gold report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the gold report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionics, oil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com.
This is David White. Stay tuned because coming up next is the Power Trading Hour right here on TFNN.
Welcome back, folks. Dow is up 317. S&P is up 42. And so let's go back. Ruby had asked a question, was now the time to get out of the NQ? Again, I don't know the time frame that she's trading, but we take a look at the short-term time pattern out there. And we still have 6 minutes before this bar completes. So I don't want to make an early call out here, but we can see at this moment we've got a bearish reversal candle at the Rhodes Momentum Indicator signal. It'll be easy for this to be a bearish reversal candle because we had a little doji out there on the prior candle. Now, but again, we have 6 minutes before this bar closes, so it may not turn out to be a bullish reversal signal, but I only have a minute and 20 seconds left in this session. So Ruby, if you do get the bearish reversal candle, again, what you're looking for is what support level, will these support levels hold on the way down? 9100, basically 9100.50 is one level. 9078.15 is the second level. The center, 9055.8 is the bottom of the box, and then you've got 901275. It'll require a close below 901275 to suggest that there's a possibility that there may be some kind of top inside of the NQ out there. So I hope that helps you out. Now, in the last minute of the show, what do we finish up? I'll tell you what. Yesterday, we had a request to take a look at Caterpillar out here. Now, I don't remember. It might have just been to take a look at it. If you take a look at Caterpillar out here, this is the daily time frame. At this stage here, it looks like it wants to head down to its breakout support level, which is 95.17. It may make a TD9 count pattern before it gets down there, so I'd watch for that. That's the daily time frame. On the weekly time frame out here, let me try to update this chart. What do I see out here? Not much. Don't really see anything there that's going to be helpful to us. Let's take a look at the monthly time frame for Caterpillar. We can see this formed a TD9 count top. Price found resistance, or support, I should say, at its breakout level of 9100. That was the March low. That's why these are so important. But it looks like Caterpillar ready to head back down and test that March area again. Folks, thanks so much for being here. Stay tuned. You've got 2 more great hours, and I'll look forward to seeing you on fantastic, fabulous Friday. Have a terrific Thursday, folks.